Good morning, everybody. My name's Kevin Dede. I am the senior crypto analyst at HC Wainwright, the first to cover crypto stocks on Wall Street more than 6 years ago. And I've known Charles Allen here, the CEO of BTCS, for what is it, Charles, like 5 years?
Yep.
Really, really fun watching your company go through its evolution. With the most recent one being this adoption of Ethereum block building, which has proven so potent. We raised our price target from $3 to $5, and the stock is cruising over 3 as we speak, regardless of that mayhem in the market yesterday. So congratulations on that. I have with me, aside from Charles, the CEO of BTCS, I have Ben, one of his engineers, and Freddy, an expert in Ethereum. And we hope that this session not only points out the value in BTCS that we still think is hidden, but also a better understanding of the overall Ethereum blockchain. So with that, let me turn it over to you, gents. You guys can introduce yourselves, and we'll take it from there. Thanks very much.
All right, so Kevin, you want me to go first?
Yeah, please.
Okay.
You're the man.
All right, Charles Allen, CEO of BTCS. A little background on BTCS. We're the first public crypto company, I think, in the world, definitely in the US. Have done everything from mining Bitcoin to treasury strategy. And in 2021, we pivoted to focus on Ethereum, right? It is, from our perspective, a much more compelling investment opportunity than Bitcoin, at least in the long run. It has ways to earn yield natively versus loaning it out. And so we basically in 2021 started providing Ethereum infrastructure, helping to maintain Ethereum's blockchain, and have moved deeper into that space, vertically integrating into block building. And it's been an amazing ride, and it's really starting to that pivot's starting to show up in our revenue. So excited to be here and talk about the company and Ethereum, and speak with Freddy as well.
Yeah, and I'm Ben. I'm the VP of Engineering here at BTCS. I joined last year to scale up the building operations. Been in the block building space since before there was really a proposer builder separation, which we'll talk about more. But we've been building blocks for a couple of years now here at BTCS, and hoping to continue to scale that up.
Yeah, thanks, guys. I'm Freddy, Ethereum Ecosystem Lead at Blockdaemon. Blockdaemon is the largest independent enterprise blockchain node operator, staking service provider, wallet provider. We got a bunch of different things, basically. The one integration for institutions to blockchain. And yeah, I guess me, myself, very deep into the Ethereum ecosystem for years. And yeah, excited to talk about what is happening, what will be happening in the near future on Ethereum. And I would just say the future is bright.
Well, we agree. We agree 100%, Freddie. And thank you so much for joining this call. It's nice to have a true authority, because I'm certainly not at your caliber with regard to the Ethereum network. But maybe we could just start a little bit about an asset versus the network itself. And I think that's part of the differentiation between Ethereum and Bitcoin. And I will leave it to you first, Freddie, and then you can hand off to Charles a little bit.
Yeah, sure. So the asset versus the network. So as our listeners may be aware, there's Bitcoin, the asset, and Bitcoin, the network. And on Ethereum is the network, and ETH is the asset, the digital currency. So those are important to distinguish from one another, because one is the technical infrastructure and one is the token that basically enables those ecosystems, but obviously they're intertwined. And maybe I'll go first. I'm more on the technical side, and then I'll let Charles explain more on the asset side, or the differences in those assets. But on the technical side, Bitcoin is proof of work, as many have probably heard. So there's large computation going on in order to secure the Bitcoin network, to make it immutable, which ultimately secures both the technology and the asset. And just to keep it brief on the Ethereum side, this is a proof of stake network. So instead of burning, wasting energy, you put in ETH, the asset, as collateral to secure the network. So this is a lot less wasteful in a way, but there's other nuances, and people may like one or the other better. But on the technical consensus that basically secures the overall network and whatever you can do on it, and ultimately also guarantees sort of the inherent value of the assets, this is the difference. Bitcoin, proof of work; Ethereum, proof of stake. And yeah, maybe Charles, you want to go on to the assets?
Yeah, so I can touch on that. I think an interesting way to think about it is, all a token is really a record-keeping mechanism, and that's really all money is. It's a record of who owns what. That could be Bitcoin, it could be Ethereum. True value is a product or service, right? Like you're actually producing something. And I think that when you look at, what the blockchain or the asset does is it provides, especially with Ethereum, is an infrastructure on which other applications can be built, where you actually have, goods and services that add to society. And the token is simply the, record-keeping mechanism of who owns what. It gets a little bit more complex than that. But if you compare that to Bitcoin, the value proposition in terms of the blockchain and the infrastructure of what it does is really providing a store of value. That there is, some development in adding smart contract-based, features to it, but we'll see, when and if that comes to fruition at scale.
So Charles, before you go on, maybe a little more background on BTCS, on how many nodes you're operating, where your focus is. I mean, I know you mentioned it, but maybe you could speak a little bit more to the company's asset base and what you've really focused on in terms of validating versus block building.
So, in 2021, we shifted to primarily proof-of-stake blockchains. We've kind of basically Ethereum. We've kind of focused more on Ethereum now compared to others, and we're looking at kind of being in that whole value chain from validation to block building. We're also running a relay. What we're not doing is a consumer-facing service, so we're much more nimble, being a kind of what I'm calling B2N, business to network service provider, compared to like a B2B or a B2C, right? You don't have to go find your customer. Our customer is effectively the network, which is really cool. I mean, that's what Bitcoin miners do. And so that's where we, have really fit into the infrastructure and excelled. We've always been an infrastructure player. We were, the first company to mine Bitcoin back in 2014. We obviously, we're too early. I think our timing is much more suited for this cycle than it was in the past. But that's where we kind of fit in, as a business to network provider that helps secure Ethereum's blockchain. As far as your other questions on assets, I think as of the last reported SEC filings, we had just shy of 40 million in crypto. Approximately 82% of that is Ethereum. That's obviously given at those prices, so that can fluctuate a lot. And we're running approximately 520 nodes for Ethereum's blockchain. So, albeit a small player, but not too shabby. And right now, I think the only public company purely focused on Ethereum blockchain and other proof of stake networks.
So Freddie touched a little bit on the difference between Ethereum and Bitcoin, but let's review that again in terms of returns over time. The investment required in mining versus the investment in staking, and how that changes the opportunity for returns. I don't know if maybe you probably have the best perspective on it, Charles.
Sure. So I mean, mining is, it's interesting, right? You basically buy a computer, plug it in the wall, and hope you make more Bitcoin than the purchase price of the computer and all of the money spent on electricity over the lifespan of that computer. It's pretty complex when you look at public companies, because no one reports return on invested capital. They report under US GAAP, so you have revenue, depreciation, all these other things. So it's really hard to tell, is a company doing well or not? And if you look at most of the Bitcoin miners, they've shifted to HPC. They're looking at repurposing their data centers to service AI and run GPUs, or looking for distressed power. Whereas we're much deeper. And I think what I love about our business model, I think Blockdaemon's got a very similar model, is we can, we're not buying computers that will be obsolete at one point. I mean, 100% guaranteed all of the Bitcoin mining machines are going to break and be paperweights and end up in the landfill. And that is very few things I can guarantee. That I guarantee. Computers have a lifespan, right? Ethereum, like when we buy our buy tokens to then stake to a validator node in which we run, those are potentially, I say potentially appreciating, because I can't guarantee, where Ethereum will go. Looking over the last 5 years, it's 2,000% up compared to Bitcoin. It's about 1,000% up, albeit it hasn't performed as well in 2024. But that's a great place to store assets, right? If you look at what MicroStrategy is doing, they're just buying Bitcoin, but there's no native way to earn yield on the crypto they purchase. Whereas we buy the Ethereum, we run the validator nodes, and so we're already getting exposure to that underlying token. We're getting yield on it, right? In some respects, I mean, we're actually doing operations, and then we're accelerating revenue growth through block building. And I think it's very similar to what Blockdaemon's doing, in that Blockdaemon's actually getting institutional customers to come and use their infrastructure. We just don't have a consumer facing. We're just business to network there, kind of business to network to consumer, right? If that makes sense.
Yeah, that's super interesting. Just kind of add to, because we're also obviously an infrastructure provider, so we're also in the infrastructure space if you look at it from that way. But I think this business to network is a good way of framing what you're doing. And we're in the B2B business, right? We're serving institutions as the technical provider so that they don't have to run the nodes themselves. So we do that for them, but they bring the capital to stake that. Now you're doing both, basically. We're focusing on the technical infrastructure side, but we're basically also, what we have in common is that we're looking for those rewards, right? Our customers can earn the rewards on their digital assets. And that's maybe another difference, coming back to the earlier beginnings of Bitcoin versus Ethereum. Now with Bitcoin, you basically rely on the appreciation of the Bitcoin asset, right? Or it depends on the price, right? There's no native reward mechanism, while with proof of stake there is. So that's sort of one of the differences, that you have like a approximately 3% protocol reward rate on Ethereum, and that is sort of a native opportunity to increase the stash of ETH that you bring in as collateral to secure this, and then you obviously have the price fluctuation, as Charles alluded to. So that's one of the differences of the assets, or from the investment perspective, and what you can do on those different networks.
So Ben, I was going to ask you to chime in on how the Ethereum network runs, and how there might be a misconception about inflation rates, right? It's pretty standard understanding and within the Bitcoin network to know there'll only be 21 million coins, but I don't know necessarily that people can see the difference between Ethereum and, say, Solana, which has a much higher native inflation rate. And I thought maybe it would help people if you could explain how the tokens go through the network and why inflation is kept at bay.
Yeah, it's a great question. So back in the day, there was a push to start a burn mechanism, is what they call it. So basically, when you want to transact on Ethereum, part of the transaction fees get burnt. They just go away. That causes Ethereum supply to diminish, and the actual outcoming Ethereum that gets rewarded or generated on each block is actually at a rate that's lower than the deflation. So we actually do see that Ethereum supply is diminishing. There are days where it fluctuates, but it's close to zero, or actually below zero on most days, just due to the burn mechanism.
And Freddie, I think there's an other differentiation from the Bitcoin too, and on Ethereum in the way the Ethereum network is managed. Maybe you could talk a little bit about how Ethereum allows for programmable operations and how often the network is attended to, which I know, Christ, there are a lot of developers that work in the background of Bitcoin, but you don't see the network change much, while Ethereum has made some huge steps in its evolution.
Yes, yes, indeed. Obviously, both networks are attended to, 24/7, basically, number one, by the developer communities or core devs, as they're sometimes called, as well as the node operators, the validators, that keep the system running and secure, right? So this is happening, but what you're referring to, I guess, is the upgradability, right? So ultimately it is software that is run. So and the different node operators have to basically agree on the version of the software that they run. And when they agree on running a new version, basically, that's an upgrade, or sometimes called a hard fork in blockchain terms, right? And these hard forks are very rare in Bitcoin land, basically. The network and the software around it has sort of ossified, and it's sort of the purpose of it because Bitcoiners believe in keeping it simple, and it is really just money, you know, in a way. But as an investor, you would think about it as a store of value mainly, right? It's good that it is secured. If it would change, then maybe the properties of that store of value would change, and you don't want to have that. You don't want no surprises, no technical bugs or anything, right? On the other hand, let's go maybe to Solana, that every once in a while the blockchain halts, which is not all that great. I mean, there's different aspects to it, and I don't want to blame them because it comes with experimentation. It just goes to show where when you do modify software, there will be bugs eventually. Some of them have more grave consequences, and others are maybe more lightly. And Ethereum is somewhere in the middle there. So there's usually 1 to 2 upgrades per year. There's going to be a new one coming up in the first quarter, probably end of March around. It's called the Pectra update. And this is basically a sequence of updates where the technology changes, and basically Ethereum, for example, started as a proof of work blockchain, but then changed its consensus mechanism to proof of stake, as I explained before. So this was one of those upgrades that has happened. So Ethereum is much more, let's say, on the move, and that is needed also because Ethereum, compared to the store of value of Bitcoin, Ethereum's value proposition is programmable money. Some say it's also the world computer or something, because basically you can run any type of program on the Ethereum blockchain. So it allows for a number of very different use cases, and I don't think we haven't even seen all that many yet. So there's large things to come. And that's the main difference. But because this is sort of more of a computer, and we all know and love the updates on our own machines, right? Whenever you open it, something is going to update. And that is sort of the same thing, but not as often, not as frequent, because obviously all this value, immense value that is sitting on the blockchain, needs to be secure, and you can't upgrade that so often. But there are those updates in Ethereum. That is a big difference to Bitcoin.
Well, thanks, Freddie, for peeling the onion back on that. I know you're holding yourself back because there's so much more to talk about on it. But I got to give Charles a little more time just to talk about where BTCS is in its operation, specifically within Ethereum, so that people have a better understanding, right? If you look at block building, Charles, I think your research pointed to $1 billion market opportunity. I just thought maybe you could kind of clue some of our listeners in on how you see that coming to fruition, and who you have to compete with for that position. You're still muted. Yeah.
Yeah, it could be even a bigger market than that, right? I think the market has the potential to grow, driven by a few things. Obviously, the price of Ethereum will drive the market if we're going to measure things in dollars. That's an easy one. And then, other products or services that, or kind of ways to think about how block space is used, how it's sliced and diced. I'll have to dig a little bit deeper in that. That's kind of high level. But also, as more applications and services use Ethereum's, blockchain, there'll be more gas fees. So Ethereum, when you think about how does a transaction end up online, right? I think that's probably just for the average user thinking about, if you own, and it's very similar for Bitcoin too, right? If you send a Bitcoin, if I want to send someone Bitcoin, and I'm not talking about Coinbase, like how does that get from me to them where it shows up on the public ledger, on chain, on that chain, so that the whole world can see? That's very different than if you just buy it in an exchange and they're just holding a record of who owns what, and it's just a centralized database, right? We kind of want to move away from that system where there's a trusted party holding custody of your assets. So with Ethereum, and please, Ben, Freddie, correct me if I oversimplify things and it's technically inaccurate. But if I want to send some Ethereum to you, Kevin, I would basically go into my wallet, assuming we're not talking about an exchange, but I'd go into my wallet and I would put in your public address and I would hit send, right? And it's going to broadcast that transaction to the network. And when I do that, my wallet application is going to ask me for, or it's going to recommend gas fees. Like, what is the transaction fee I should pay for this, right? It's going to do that. The wallets are smart. They're going to do this based on what kind of the going rate is, right? And this is the most basic transaction. Just I'm sending you some ETH. And think about it like it could be a stamp, or it could be, hey, I want that there tomorrow. This is a FedEx, right? And so what I'm willing to pay may differ based on what that transaction is. And I did a very simple transaction of, me sending you some ETH. There could also be a layer 2 blockchain, right, that is using, that is leveraging Ethereum securities. For example, like USDC, right, in Tether, USDT, are built on primarily Ethereum. They also can run on Binance, but to keep it simple, those blockchains, those tokens are leverage Ethereum's infrastructure for security, right? So they're effectively, paying fees. And so what happens when I broadcast that transaction that I want to move it to you? This is where it kind of gets complex. It goes into a queue, like they call it the mempool. From there, what happens, right? Validators are the ones that get to write transactions to the blockchain. So all the validators provide consensus to the network. Every 12 seconds, a new block is written to the blockchain. I think Bitcoin's every 10 minutes. So it's a very much faster in terms of block time. And in that every 12 seconds, a validator is selected to propose a block. So either all the validators are providing consensus, or one validator is selected to propose a block, which is, think of it, mail in a mailbag full of transactions to be written on the chain in that 12-second slot. Most validators, I think 93% is about now, choose to sell their block space, right? Instead of saying, hey, let me get really smart and figure out the best block to build, right? You want to be FedEx. You don't want to be, the postal service taking 20, was it 50 cents for a stamp? Or I don't know what the going rate is. It's been a while since I licked a stamp and put it on a piece of mail. But you really want to maximize your value, right? That's what the validator's goal is. How can I extract as much value from the system as I can to propose my block? And so what they do is they sell it to a block builder who's really good. They're specialized, right? And then when you start to get a specialized industry, you're mature. It's actually a really good thing, right? And so you have a validator that's kind of good at just running a node. That's kind of they're good at collecting capital. You have a builder that is going to be good at assembling bundles and transactions, and then you have searchers, and they may be more like traders who are looking for opportunities, arbitrage opportunities, and creating bundles to submit to builders. So I think that's kind of the simple way of looking at the how the network works. It's almost like a stock exchange to some extent, where you have traders, brokers, and an exchange, right? I know it's not a perfect analogy, but that's where we kind of fit in. So we run validators, which gives us access to block space, and then we also are, block building. So the two things, well, the one thing we aren't doing is searching, right? Because there's some conflicts of interest there with block building. And it's also complex from an accounting standpoint as a public company. I mean, it was, pulling hair out, going to the office of chief accountants for 10 months to figure out what's revenue in this, new business model, being the first one to do it. But that's effectively where we fit in. We're a validator, a builder, and in between a builder and a validator, there's something called relays. Think of them just as escrow agents, but we probably don't need to, they just keep everybody honest between the validators and the builders in the auction.
So you mentioned having north of 500 nodes that you're operating your own, and that obviously gives you access to block space. But my understanding too is that BTCS goes out in the market to buy blocks in order to build them. So maybe you could talk a little bit about what the financial implications are for running a validator, searching for more block space, and building that block space.
So on the validator side, if you sell your block space, you're selling it to a builder, right? In the builder market, which is right now, the builder market's a little bit of a problem in that there are two builders that account for over 90% of the market, right? It's Titan and Beaver. They're the two, main players in the market. We're a distant, I think, fourth or fifth, right? In the market, which isn't bad as, kind of a new player. And so what happens is the builders are going to bid in an open auction every 12 seconds to the validators to buy the block space. If you've bought that block space, think of it as like inventory, or very short-lived inventory, but it's like cost of sales. That's like what it costs you to buy that block space. And then you get to keep, when you've bought that block space, all the transaction fee revenue or gas fees within that block are yours, right? That's all that comes to you. The validator has no claim to that. So you're basically buying that block space from the validator and then filling it with the transactions that you can either get from the mempool, get from private order flow, and then it kind of gets into that more, it gets pretty complex when you start going down that rabbit hole. But that's really where we're playing. It tends to be a lower margin business than validation, but a much bigger, growth opportunity.
So
right. And maybe just to add, like, so we're downstream. We're only the validators, right? So we're running the validators on behalf of our customers, I should say, right? Because we don't own the capital that fuels them, basically. But we happily outsource, the block building to specialists like BTCS and others, because ultimately they are so much better in finding these opportunities, because like Charles said, it is complicated and it is, happening within seconds, right? Where you need to screen all this mail that is coming through the system to stay in that picture and put the most valuable things into that bag that then sort of represents the next block. And so those specialized builder companies are specialized in doing that in the most profitable way. And because the builders are competing and auctioning, this, off to the validators. So the validators earn more because they rely on those specialists, and the specialists also make their money with it. So it's a win-win situation, basically.
So I just was hoping that Ben might talk a little bit about how he's helping BTS build its block building capability and the competitive advantage that a public company might be able to bring to bear in a market that, apart from the two large companies, appears pretty fragmented. And the way that you think you might be able to continue to build more share.
Yeah, it's a great question. The builder market, back when this whole market first was founded, was much more competitive. We saw about 4 to 5 builders were actually probably holding majority of the share. Soon, like, sophisticated builders started to come into the market. And nowadays it seems like the name of the game is order flow and holding on to exclusive order flow. And we're actually been working with a couple different companies to fight that. we really think that there's a better market with decentralized builders. More builders in the market is better for validators. More control, more access to order flow is better for validators. Those are ways that's the main way we're going to see growth in this market, for BTCS and also for others as well. In terms of how a public company has more advantage here, I bet you Charles can answer that better than I can. I can definitely get more into the technical weeds, but aside from that, we're working on different ways to speed up block building. We've been moving all of our servers over to bare metal. We started using Rust for all of our builders. We actually just released some new builder code this last 2 weeks. We've taken block building down from 180 milliseconds per block to about 20 milliseconds per block. So we're seeing some extremely high throughput right now, and we're just working on gathering more order flow to maximize that potential.
Thanks, Ben. Charles, do you want to chime in a little bit on BTCS's position?
Yeah, I mean, I think as a public company, we're really uniquely positioned in this market. And the reason I say that is it really reminds me of 2017 in Bitcoin mining, right? And for those of you who don't know, I helped Marathon get started in 2017, right? It was a patent company. They were supposed to acquire another company I was involved in, and basically gave them a turnkey business model. And the thing that they had that others didn't, right? Like BTCS, we missed the boat in 2014, was access to capital. And so we see this time and time again. Like, look how successful MicroStrategy has been, right? In executing their business plan, which is basically just buy Bitcoin. And they're able to execute that because they have tremendous access to capital that nobody else does. Even we don't. We have, we don't have the same access to capital they do. And they're even if you're public, there's different. It's a sliding scale based on where you are. But that is something that, looking at the competition, we do have, right? And we're very strategic about how we access that capital. But if you look at Mara, it was a $10 million market cap in 2017, and now it's $5 billion plus. Right. And they were able to do that when the market was primarily private Bitcoin miners because they had access to capital. And so we have a very unique business model in that we can raise money, accretive money, right? If you look historically, we like to be targeting like 4 times book where we're raising. I mean, we typically do not raise, I can't guarantee it, money below book. Like that's like, we'll do everything we can to avoid that. We want to be doing it at a premium to book. Right now, MicroStrategy is about 2 times book. We can create the most shareholder value if we can get that spread, right? And so being able to do that, like being able to put capital to work immediately, is really important. There are very few industries you could do that. You could do it with Bitcoin mining, but it's actually even slower, right? You got to buy the machines, you got to wait for them to get delivered. They're depreciating before you even get them. Then you got to plug them in, you got to wait. We can access capital very quickly, or we can the capital we access we can deploy very quickly. So, for example, this is all public information. We raised money in, I think it was like November when our stock ran. We raised, I think it was approximately $6 million, bought over 3 million of Ethereum, and we had that staked. We did it in Rocket Pool to scale up because it's a liquid staking provider. So we actually capture some additional margin, but it gives us more block space, which helps our builder. And we were able to deploy capital within like 3 days, right? Like, what other industries can you do that in, where you can go from raising capital to deploy and adding value in terms of revenue, not net income, but adding positive revenue in an accretive way for your shareholders. There's very few industries you can do that, even with MicroStrategy, and they're just hoping the price of Bitcoin goes up. So we have the exposure to Ethereum, plus we're buying it and we're deploying it in a vertically integrated way. And so I think that puts us really in a unique position, albeit we're not really competing with a Blockdaemon, right? We're not going to that, B2B, we're B to N, but nobody else is doing this in the public markets. And I would say most companies that would be interested in doing this are probably 1 to 2 years behind us, right? Just as we were, 1 to 2 years, maybe 3 years ahead of them on Bitcoin mining, years and years ago, we are, at least in the public markets, well ahead of anybody else doing this, right? Just figuring out how to account for this stuff was 10 months. And so I think that, puts us in a position where, with the access to capital we have and, being public, like we can I don't think we're going to be number one overnight. I'd love to be number one, but I think it puts us in a position to kind of climb up that leaderboard pretty quickly, especially compared to the other smaller peers that are in the block building space.
So, Freddie, I'm definitely going to ask for Charles's opinion on this, but if I remember correctly, you've dialed in from Germany.
Yep,
So
that's right.
obviously there's been a big change. We're going to kind of switch gears a little bit and talk about I mean, Charles has been battling the SEC. So I kind of wanted to hear from you and your perspective outside of the US, what you think will happen to the whole cryptocosm with the change in the White House in the United States. Before
Basically,
I let Charles jump on that.
right. Basically, everything changes, right? We had the previous administration was super anti-crypto in multiple different ways, basically, Operation Choke Point 2.0, SEC, all those agencies and whatnot, three-letter agencies I've never heard of before, but they're all pretty much against it. And now we're switching like 180 degrees, right? This is the total opposite. We're having a president that launches its own meme coin. Now, whatever you think about that, but it just goes to show that this is not just a change of course or a slight adjustment as it usually goes, from one administration to another. This is a 180-degree change, and this should be super bullish for particularly the US and the institutional market in crypto. So we're super excited about this at Blockdaemon. And one of the concrete example is that the SAB 121, the basically the rule that made it impossible for banks to custody crypto assets, is now off the table already, which was sort of expected to be discarded, but now it's already gone, and that is like massive implications for that part of the market. But overall, it's just much more favorable conditions.
And what are you seeing, Charles? And I mean, it's probably too early to tell that there's been any SEC change, but certainly the perspective has changed. And I'm wondering what you think the implications might be for you as you build out your vertical integration within the Ethereum chain.
Well, I mean, look, we've been public 10 years. And so it's all I've ever wanted is to be like treated like any normal company, right? Like I'm on the board of a biotech company that got an S1 done in 5 days. A buddy of mine who's the CEO of another biotech company, they got an S1 done in 3 days. And I look at this and I'm like, wait, it takes us a year to get an S1 done. It took 6 months to address 7 immaterial comments. We've been lucky. Well, I wouldn't say lucky. We've been very cautious, right? We're extremely conservative with the businesses we go into, right? For example, we never did liquid staking, so we never did custodial staking. There's all these businesses we just never got into. We bought Bitcoin ATMs back in the day, but never turned them on because we were afraid of money transmitter licenses and all the different requirements. And so because of that, we've primarily stuck to Bitcoin or blockchain infrastructure, right? Initially Bitcoin, now proof of stake Ethereum. And our viewpoint there is, as a small company, we don't want the legal and compliance overhead of acting like a bank, a stock exchange, or whatever else they may create. But still, for the last 10 years, we've answered ridiculous amount of questions, right? Why isn't Ethereum a security? Literally was going on until last year. And it's like, well, because the SEC, what was the guy's name at the SEC? It was he said it wasn't, right? Like
Right.
Jay Clayton said it probably wasn't, right? Like, so why do, like, we literally get questions to the SEC, like, what's your legal analysis on why Ethereum isn't a security? Like, well, why don't you just tell me? How about that? Is Ethereum a security? Yes or no? Like, I'd like a freaking answer to that question already. It's been 10 years. And so when you look at that, like, I think we will get an answer to that question. We've put that in our filings, but like, why do you beat up on a small company that's trying to have disclosure so investors can make investment decisions until they want to own this thing? And can these guys create value for us? And it was all just distracted with, is Ethereum a security? Why aren't we a 40 Act company, right? Just, I mean, this is all in our filings. Investors can go look at this. So I am super excited for an SEC and administration that cares about is our financials and are our disclosures correct? Can investors make informed investment decisions without getting misled? And I think if they can do that, and they can do that for the crypto industry, there is we can actually operate like other normal industries in this country, and technology and innovation can thrive. So I am super excited, and it's coming to fruition. Like, Hester Pierce is now heading up the crypto division. I sent her an email yesterday, and I was like, congratulations, excited to see what you do. I was on a conference call with her with the Nasdaq set up, and I said, hey, what do I do about this registration statement? It's been near a year, the second time the SEC's done it. And her response to me was, well, there's nothing you can do, right? Like, Gary Gensler sets the agenda. I'm like, why isn't short selling on there? Gary Gensler sets the agenda. And it wasn't on his agenda, and he wasn't letting anything crypto through, regardless how compliant you were. So I think it's going to be an interesting time. I'm very excited, very optimistic about the future. I hope there's aren't a bunch of people that try to take advantage of it and do engage in fraudulent activities. But it does mean for all of the companies that have been trying to figure out how to position themselves, try to offer real products and services that can bring this innovation and help basically grow an industry within the U.S. I think the gates are hopefully open. I'd actually be really curious, Freddie, for your opinion on Europe and the micro regulations and what's going to go on there with the administration change in the U.S., because that's something that we've kind of kept a distant eye on, but aren't, it doesn't really.
That would be interesting to hear, Freddie, right? Because it has global implications for the Ethereum chain.
Right. I'm obviously not a regulatory expert at all, by all means, but
You're
my
far
understanding
more
was
versed on
basically
it than I am.
basically that the MiCAR framework set sort of the stage and basically a global standard for regulation in the crypto asset industry, right? And in a unified European approach, right? Different countries, and luckily Germany was one of the earliest one that had pretty clear regulation, but it just has one guidance for the whole European Union, which is great. And I thought we were sort of ahead of everyone else because like a year or two ago, obviously the US regime was quite different. Now it feels, and also a lot of stuff was going on in Asia, which clear and more favorable regulation. Now it's sort of, I think the US is going to, catch up very quickly because of the access to capital for one, and the, innovation capacity that is just inherent in the American market. So this is, like I said, very bullish for the US ecosystem. For Blockdaemon as a global provider, we basically did some geopolitical balancing basically at the time when the times were tough in the US. We grew a lot in Asia. We always had a European business, so this is but now sort of our home market in the US is also growing a lot. So yeah, we're super excited, and Europe needs to up its game a little bit, like in many ways. But also here we were sort of ahead in those regulatory regimes, but now need to see that we're not losing out.
So this is sort of a general question for the panel. I'm wondering if anybody wants to throw an opinion out on Charles's question and its resolution, and that is, like, Ethereum, does it become a security or not? And does that mean governance falls under the SEC, or do you think it swings to the CFTC? And anybody feel free to walk on that one. It's a little outside of the bailiwick, but I think it might be interesting just from, in regards to Charles's forward thinking.
I'll jump on that. Correct me if I'm wrong, there's over 30,000 validators, right? And so if you use that as the metric that provides a security for the network, it's decentralized, right? There's no single authority that controls it. The profits don't flow back to the shareholders. Like, it's not a security, right? We did a lot of analysis on this. It's been some time, but it would be nice to have a clear answer to that question. But I think everybody's accepted it's not a security. Where it falls under U.S. future regulation, right? We probably need a whole new commission, right? A crypto commission. And that's something I've been thinking for years, is like, none of this stuff should fall under the SEC. unless it's in a security, and it shouldn't follow under the CFTC. It's not really a commodity, right? It's kind of it's a new thing. Let's create, a new commission with people that actually understand how it works and create sensible regulation around it instead of, sticking a square peg in a round hole.
So, Charles, I think you referenced the Hinman letter or the Hinman speech. Do you think whoever chairs the SEC going forward will maybe use that to shore up the position that, to your point, that Ethereum doesn't become a security?
I don't think they need to. I mean, I think with the, Gensler gone, I forget the other person that was gone, and was it Mark Yuta and Hester Pierce? I mean, a majority of the FCC, the majority of the 5 commissioners are pro crypto. I don't even, that ship sailed. I don't even think you need to go there. I mean, geez, you got Trump coin, like, okay. Like, we're talking about if Ethereum's a security, we've got, Trump and Melania coin, so I don't, it's kind of a moot point at this point.
Yeah, they're coins that are down the food chain that probably need a little more supervision. Brings up another interesting point, right? On Ethereum's proposition and versus the meme coin proposition in terms of shareholder value. And I'm hoping events like this will help shed some light on what BTCS brings to the table for Ethereum and the investment opportunity. Maybe you could talk a little bit about that versus, throwing money at the wall like spaghetti and hoping it sticks on a meme coin.
I'll
leave that to you, Charles, because I think
I'll take that, but I'd love. I mean, Ethereum, and I don't want to I'll make a securities analysis, but Ethereum's not security. So if Ethereum was a company, it actually creates a product or service, right? That generates rewards. It's just not in the traditional sense. And so, maybe I'll turn it over, to Freddie and Ben to talk about the type applications that are getting built on top of Ethereum and how that's going to drive real world value, right? Because that to me is the most exciting thing. That's what got me, into Ethereum. That's why we pivoted, the company in 2017, basically away from, we started moving. We were 50-50 Bitcoin around 2021. We just kind of scrapped Bitcoin, not because we don't like it, but like, we'll own that personally. We can own it, but as a company, Ethereum has a lot more utility. And so, maybe Ben, I don't know if you want to give some kind of examples of L2s and things that can be built on it. That would be awesome.
Yeah, when Freddie alluded to how often we're upgrading Ethereum, I think one of the biggest strengths that Ethereum has is that it can upgrade quickly and remain relevant. It's really hard for a blockchain itself to fit into the market. The market for blockchains and like the use cases for them is growing almost every year. It's a new market. And so Ethereum has gone down this path to be a layer 1 and very supportive of layer 2. So layer 2s are blockchains themselves that provide or that use Ethereum to provide data availability, right? That's a technical term, but basically they're powered by Ethereum, and Ethereum stays relevant through these upgrades. The one coming in March is going to make it more affordable for L2s to roll up. It's going to be faster for L2s to integrate with Ethereum. And it's actually shifting and pushing them towards these new features by making it more expensive to not use those features. So we'll see some pretty cool use cases coming from those. But that's one of the reasons that Ethereum drives value, not through sentiment, but through utility. It provides all of these functionalities that Bitcoin and other coins don't really have. I'm sure there's more, but I think Freddie can talk more about the utility.
Well, yeah. Before you start off, Freddie, I was kind of hoping that we could expand a little bit on what Ben said, so people really understand the breadth of the Ethereum universe. I mean, it's pretty amazing, right? There are other chains built on top of it, and those other chains are finding applications in the real world. So I was kind of hoping the two of you could kind of expand on that, because that's in my mind, part of the Ethereum value proposition is the fact that developers are leveraging it to address particular niches, whether it's finance or logistics. Maybe you could offer our listeners some examples of some of the most successful implementations of L2s that you've seen and their use cases.
Yes, exactly. So basically the layer twos, like you said, are building on top of Ethereum and allow it to scale. Because any blockchain, even like the ones that are so-called high throughput like Solana, will not be able to onboard, let's say, transactions, the flood of transactions that we will see when, AI bots are training and, all this, like the TradFi industry coming on chain, like no single blockchain will ever be able to match that, right? But with the Ethereum strategy of sort of being an economic zone, that's what they talk about, right? To connect all those different layer 2 blockchains, and there's layer 3 blockchains and side chains and whatever, but it's they're all basically in this one economic zone, and that allows for the movement of capital. And in a way, it reminds me of the European Union without the bureaucracy, maybe, because you get a free flow of capital, of people, of applications and transactions and liquidity, I guess, in the blockchain terms. And that is, I think, the strength paired with the different paths to innovation, right? Like we said, it's not ossified like Bitcoin, where just the one group of core developers are very conservative and stick to that. And Ethereum, you can have that, and one L2 is maybe just staying very conservative, and others are innovating and moving ahead. And that is all happening in parallel. And so that should, this innovation drive and horizontal scalability will allow the Ethereum economic zone, let's say, to prosper. And with regards to use cases, one of the most successful, I think, is the DeFi, so the decentralized finance, which is ultimately, lending, borrowing. There's some things like liquid staking, like Charles alluded to, in terms of that is closer to the blockchain terms, but really DeFi, lending, borrowing, and all those types of financial applications, if you will, are pretty much standard, but they're robust, they're decentralized, they have many benefits. And in some of the crisis moments, we've already seen that DeFi actually continues to function, never breaks down, while traditional systems have issues at, edge cases maybe. So that ultimately is something very exciting. I think particularly with stable coins, we'll see a lot of innovation. So stable coins are cryptocurrencies pegged to normal fiat currency, mainly the US dollar, like USDC, USDT, and all those. And those are great for, let's say, remittances, international payment use cases, for everyone where the crypto asset volatility is too much. And ultimately, if you want to, pay your employees or your service providers in US dollars, you might want to avoid the volatility, but you can still transfer the money on chain. And I think that's going to be super powerful. And the L2s, the scaling enables it to do like sub-cent transaction, and they're instant, right? And compare that to a remittance payment from, I don't know, the US to Guatemala or something, and the service provider takes like 10 to 20% fee cut, and it takes a week until the other person gets it. On the way they can get robbed, all those things, right? So there's a lot of potential in the stablecoin stuff, and I think we'll see that booming in particular in 2025 and beyond. And then there's just any type of use case, and in logistics, identity, there's so many use cases. But I think that the financial use cases will be dominating in the near future, because it's just the most natural and most, it's the internet of value, right? Some people call blockchain the internet of value. So it's just the value layer on top of the internet. And I think that's where it came from, and that's where we'll have the strongest success, at least in the near term.
Hey, Ben, I know we can't argue with, what Freddy's given us so far, but I was wondering if maybe you saw things that he hadn't really mentioned that you think could become important.
Oh yeah, I've been talking about this to a couple of people on my team, that what we see today in terms of how transactions flow through Ethereum is going to be completely different this time next year. There's been a lot of work on what they call pre-confirmations, execution tickets, and especially with these rollups, base sequencing. These are all going to be buzz terms that everyone's going to be seeing about, reading about.
Is this part of Pectra?
Pectra has some things that support that. There's actually a lot of um, outside of Ethereum development. So like this is where those sophisticated actors like builders come into play. Um, some of these L2s like Unichain, so Uniswap launched their own L2. There's going to be what they call application specific sequencers, which is a fancy term for uh, builders that are ordering those transactions and ordering those transactions as they get rolled up to Ethereum. So there's value in based on the order of transactions. Builders already capture that for validators today, and there will be more of that value being extracted through these L2 rollups, which just means more money being made for validators, for builders, and the market's just going to continue to grow, especially because of the way that Ethereum is developing to be kind of the settlement layer or the rollup layer for all these L2s.
So as I've watched Ethereum evolve, and this is just my humble opinion, I think probably the largest transformation, at least again, right, from my perspective, was the merge in September 22. So I was kind of hoping, Ben, that you might be able to sort of rank how you see Pectra and then some of these other innovations in terms of how it might affect the average user and then obviously BTCS's opportunity.
Yeah, that's fair. I think I do agree that the merge was probably the biggest upgrade for Ethereum. It was long standing for years working on that. Almost every upgrade, there's articles that are saying that this is the biggest upgrade for Ethereum, and I think the standard of deciding what makes it big is it changes every time they write those articles. But all these upgrades end up being very impressive. There's teams of hundreds of developers working together to make these happen. They're testing them. We're seeing this all happen in real time and open source development carrying the way. The functionality from Pectra that's going to be really cool is in terms of the EOAs, externally owned accounts. It's going to be programmable wallets. There's going to be functionality that's going to be added to either your MetaMask wallet or your Coinbase wallet. All of those things are going to come up probably this year. You'll see new functionality added to those. Things like gas fees paid for by someone else, or swaps happening automatically on your behalf. Different things like that are going to be built into the wallet layer now. Actually, I bet you Freddy can talk more about that because they have their own wallet. We should be using the Blockdaemon wallet, not MetaMask. So.
Thanks for that shout out. Indeed, but it's a non-custodial institutional wallet, so it's not for like everyday users. But yes, you are right. Basically, I think Pectra on a high level allows for increase in usability and scalability. So very much relevant for the end user that is using the network. But it's also relevant for example, the stakers that put their collateral in, because, for example, one of the changes is that it allows for those rewards to auto compound, right? Which is obviously for someone that is a long-term investor in this space, this is a super nice functionality, so they don't have to compound manually, basically. So that is one of the other exciting things for the staking and investing part. Yeah, but agree. Like in terms of the merge, that's not the most important thing. And then there's other things that are coming after Pectra, which again is in the mainly regards to scaling. I think that is sort of the let's say the topic of the day, with Ethereum changing leadership and then sort of accelerating a little bit to make up some of the lost ground versus Solana. At least that's what it's sounding like in Twitter.
Yep.
But that is sort of probably the main focus of the next fork, to aggressively scale up and thereby bring the fees down. I think that would be much needed improvements as well, because we see the demand on Ethereum and all other chains just exploding, right? So it's sort of an inflection point in the industry, I think. So there's a lot of growth and probably exponential growth ahead. And then every chain needs to basically prepare themselves for it. And obviously, as a side effect, all the players and companies in this space can benefit tremendously, obviously, as can the investors into those companies or into those assets as well.
So we kind of figured this might happen. We we talked about a lot of things, and I think we pretty much agreed that there was no way we're going to be able to get through everything in an hour. But we've pretty much reached the conclusion of that hour. So I'd like to pass it off to Charles and maybe offering just a kind of a quick summary of BTCS's investment proposition and its positioning for the future.
So we're really trying to position ourselves as the, a leader in Ethereum infrastructure, validation, building, not B2B, not B2C, but B to N, right? And we're looking at those proof of stake chains. Right now, we kind of want to be the best of both worlds, right? You get your exposure like a MicroStrategy, but instead of Bitcoin, you're getting Ethereum, and then you're getting a high growth, revenue generating business through the validation and block building, right? And so that's kind of like the growth of a 2017 era Bitcoin miner combined with the asset play that a MicroStrategy would have, kind of combined into one, and combining that with the focus on, right now Ethereum, which is no other public companies are really focused on. So we're the only ones doing it, which means there's obviously an educational component. But the one of the main themes we've talked about here is, how Ethereum is going to add, utility to the world, right? And that's the high level, and it is huge. What you'll never see, I don't think, is, when it becomes mainstream, you won't even know the product or service you're using is being based on Ethereum's blockchain or an L2 on top of that. And when we hit that point, we're there, right? Like no one asks how their Uber works, right? You pull out your phone, you push a couple, you tap a few times, and your car shows up, right? Soon it'll be you'll be in a Tesla, and you won't even, just your own car will be driving. But nobody cares how the technology works, except in the beginning. Everybody just wants utility that they benefit from. It makes their lives better in the long run. And I can tell you with firsthand experience, Ethereum does that. Like one use case that Freddy touched on is sending money. I invested in an early stage project some years back, and I had to send a reasonable amount of money to Dubai during COVID. I could not, had to make an appointment at the bank with a manager. It took days. It was an international wire. I was like, this is going to take a week. I'm going to miss the closing. I got it done with USDC in under 5 minutes. I didn't have to walk away from my desk, right? Like large M&A closings still have to coordinate, internationally the timing of when banks close. So they literally will set up their closings when both banks overlapped in being open. That's crazy in 2025. So there is so much innovation that hasn't even been touched yet in the capital markets, in finance, in other industries as well. And I think a lot of that's going to end up being built on Ethereum. And as the only public company currently focused on that, I think we're pretty well positioned to capitalize on that. And I think, Blockdaemon's, extremely well positioned as well in this market.
So before we sign off, Charles, remind everyone how they might be able to access this panel discussion.
So I think correct me if I'm wrong, I think there's gonna be a live link that we'll post it on Twitter, probably put it on our website.
You'll put it on the BTCS website as well.
Yeah, we'll have to get it from you guys, and we can share it with Blockdaemon so they can share it with their.
Well, I can't thank you, gentlemen, enough for allowing me the pleasure to work with you on this. It was very enlightening for me and this discussion and our previous one. So thanks again for joining. And I'm sure Charles would like to express his appreciation as well. And then we'll sign off.
Thanks for having us.
Yeah, no, my pleasure. Thank you very much, Freddie. Great to get to know you. You too, Ben.
Thanks,
Keep that hard work going. Put that Carhartt hat on when you need it. And I hope to talk to you guys soon. Thanks very much.
Thanks, folks.
Take care.